Hello, welcome back to a new video. Today I will talk about Fibonacci and the Fibonacci tool. I will show you how to draw Fibonaccis, and then I will also show you how to use them in your trading. So before we get into the charts, let me just show you what we are looking for in Fibonaccis. So when we draw a Fibonacci tool, we are always looking for a zigzag pattern. So this usually looks something like this. You have your first trend wave, then you have your pullback during the trend, and then you have your continuation. And so when we draw Fibonaccis, we always start here at the origin of the trend. Then we move our Fibonacci tool from A to B. So this is our point A, this is point B. And then automatically the Fibonacci retracement will give us a point C. But the way we trade it is we don't look for, or we don't trade the retracement. So because many people, when they use the Fibonacci tool, they look for this original or this initial trend wave, then they draw their Fibonacci and then they just wait for a retracement and then trade off the retracement. But I think this is not a very good approach, because let me put on the Fibonacci tool and then you will get a better idea. So you can see here, that's how we draw it, from point A to point B, and then you have those retracements here on the left hand side: 76, 61, 50%, 38, 23.6. And the way people trade it is usually they just have a pending order and then wait until price hits, for example, the 50 level. Then they automatically get in on this trade, and then they hope that price continues. But what often happens is that it is hard to predict, if not impossible, which of the Fibonacci retracement levels will actually hold. So some people will get in on the 61.8, and I think those are reversed here because I'm using the extension, but it does not really matter. It's just about the numbering here in TradingView. The way it's drawn, it's correct. So let's say you put your order here at 61.8, and then price moves into the level. Here you get long, but then what happens? Price tanks, it goes to 38.2, and then it takes off. So the next time you will wait for the 38.2 level until price gets there, and maybe next time price goes only to 31.8, and then it takes off. So your order here down below will be missed, and you will miss out on this move. So trading off of Fibonacci retracements, what I want to say is it's much more of a guesswork, and I don't really recommend it because it is not a very good and robust approach. Instead, what we are looking for is, in our reversal trading, we look for this initial A to B move, then we wait until C has formed. We don't do anything here around the C retracement. And then once the C retracement has formed, let's say we get a 50% retracement here, then we wait for this final wave to complete. And the final wave, they usually go to 161.8, 176.4, or the 200. And there's even one above that, 261.8, you can see here. But again, we don't trade blindly off of those levels. We just wait for confirmation until price reaches such a level, and then we wait for clear reversal signs that price is not able to move higher. Here also our trend wave analysis comes in. We use the RSI, which you can see here at the bottom. I will show you that in a later example. And so we look for price movements that reach into such a level. And then once we can see that price is actually reversing, the trend is exhausting, and we don't have enough power anymore, then we get short here once price is actually reversing. And again, we never try to call the top or the bottom of a trade or a trend, but we always look for very clear signs that the trend is reversing. So you will never see us enter a trade around 200, 176 or 168 just for the sake of it, but we always wait for this to form, move into the opposite direction with confirmation that the trend is over. So long story short, let's get into a few trade examples, and then it will become clearer what we are looking for. So now we are here on the US dollar Canadian. We are on the 4-hour chart, but again, Fibonacci's work on all time frames and on all instruments, markets, But at the same time, it is important to understand that not always you can draw a good Fibonacci tool. Sometimes the market structure is just not working for the Fibonacci's, and in such a case, don't try to force a Fibonacci. Just accept that there is no Fibonacci that you can draw. Use your other tools that you can use for your confirmation, and then make your trading decisions accordingly. So let's see here. There are a few that we can draw. Here's probably a first one. It is a very small size. You can see here A to B, B to C, and then here it's not a very big move, but let me just draw what I mean. So here's the initial move, then we get the retracement here, and then finally here is the final leg. So that would be one. I will just draw another one, and then we can use our Fibonacci tool. So here is a nice one. It is stretching out over a very long period of time. You can see here's the initial start of the downtrend, A to B. Then here is the C move, the retracement wave, very nice. And then here down to the bottom you have multiple trend waves, the first one, the second one, third one, but this counts as our initial or our final trend leg. And now let's take this off and we will use our Fibonacci tool. Oops, that was wrong. So let's use the Fibonacci tool on the first one. You can see here A to B. And then here on the way down, you can see here very nice on the 50 retracement. And then on the way up, we are missing the 138. But you can see also the very short trend structure, and in this case it's a good example that Fibonacci's don't always give you a good projection. Sometimes they just reverse before that, and it's something that you have to accept. And now on the way down, you can see here, you can draw it from this one or this one, doesn't matter, they are the same area. So this is our A to B, then the C retracement, very nice again, we stop at the 50 retracement, and then the final sell-off. You can see we stop briefly at the 138 here, and then at the 161 we get a nice spike before then the price reverses. And so in such a case we can then also use our Bollinger Bands with the 20 SMA. You'll probably see that this is also a Bollinger Band spike here at the bottom. In fact, we can just take it on and see what is happening here. Bollinger Bands. Okay, here very nice. You can see that's the famous Bollinger Band squeeze that we trade. The Bollinger Bands are coming closer together. You are seeing the spike here. There's also a double bottom, 161.8 Confluence, and then a very nice reversal. So that's a good example of how Confluence works. We can go on. So here would be another one. You have the A move here is the bottom of the previous move. The B move here, a very short C retracement, and then also the trend leg is very short. So once we draw it, I'm assuming that we don't have a good projection, but it's not about perfect setups in trading, it's just about using your tools. So let me mark that, and you can see again A to B. Then this leg is very long, the retracement is very short, and that's a good lesson here, that the shorter the retracement here is, then the shorter usually the final trend wave is. So you can see already this one was a very explosive first move, then this was a very short retracement, and then the final trend leg is also very short. So overall, not a perfect example here for the Fibonacci's, but you get the idea how you can draw them. And again, if you see that price is not reaching any of the levels, that's not a big deal. It just means that we would not have entered a trade, and this way we can very nicely use the Fibonacci tools as an additional Confluence and an additional filter tool for our trading, which keeps us out of low probability trade entries, and we can so filter our trades much better with this Fibonacci tool. So here again you can see this is also not an optimal structure. You can have here your A to B move at the top, then the C retracement is very deep, we almost reached the previous entry. So this is also not a classic Fibonacci example, but nevertheless, let me just mark it and then you will see what happens. So you can see we make it to the 23.6, very nice reaction, and then on the way down we make it to 176.4 before we then rally. And so you can see that trend waves and trend structures always change. Sometimes you have a long A to B move, sometimes you have a very short retracement, sometimes you get a very deep retracement. On other trends you don't reach even the 138, and on some trends you overshoot the 200 or 261. So the Fibonacci retracement tool helps you understand that markets and the way price moves always changes. No two market structures are alike, and that's a very important lesson to learn, because in conventional trades or technical analysis, when we read the common books or the other websites about trading, then you will always see the perfect examples. But when we come to reality, then you will see and have to find out the hard way that all the books that you've read are not really preparing you for real life trading. So another one here, we can use our Fibonacci tool, A to B. Then here, this or this will either be our C retracement. For us, it does not really matter which one is the C retracement. Is it this one? Is it this one? Is this invalidating our Fibonacci tool? It does not matter, because all we want is to find a good Fibonacci extension and a good confluence here on the final C wave. So you can see A to B, B to C, whatever it is, 50 or here 38.2. And then on the way up, we almost reached the 200, which is a good exhaustion signal. You can see also here the nice double top. Again, awesome confluence here. If we take our RSI, this will also be a divergence here, because we have this double top very shortly after this long uptrend. So again, great confirmation, great confluence here with the help of our Fibonacci tool. Then here again, very long A to B move. This will probably not make for a good Fibonacci tool, so I'm not even gonna bother about this. And yeah, so I hope you understand now how to draw the Fibonaccis a little bit better, how to use Fibonaccis, also how to avoid some of the common problems that you will see among many traders who use the Fibonacci tool in their trading. And yeah, so if you are new to Fibonacci's, I just recommend you scroll back for some time, just pick a few markets, scroll back, and then just start applying your Fibonacci tool to the market. Just play around with it. And one of the most important things that you have to understand is there's no right or wrong when it comes to Fibonacci's. You just have to see if you can find a very nice, or even don't look for very nice, just look for a regular trend structure, A to B, B to C, C to D. So maybe like this one could even be one, although it's not perfect. You can see here A to B, B to A to B, B to C, and then here 176 is our end, and then price stops the downtrend. So again, just don't overcomplicate things. Play around with the Fibonacci tool, try to draw a few, see how price reacts, and then use it in your own trading. But again, don't use Fibonacci's as a standalone trading method. Use it as Confluence for your own method to find high probability trade areas or high probability reversal areas, and then Fibonacci becomes a very powerful tool as for any trader basically. And again, if you like my videos, give me a thumbs up on the video or leave a comment below. I would be very happy to hear from you below. Thank you very much and happy trading.